And then return on common stockholders. This is very similar to return on assets, but then this is as an investor, if I invest money, what's my average return? What's my return on common stockholders' equity? And so we could look at our net income minus preferred dividends, because remember, common shareholders don't have a right to dividends before preferred. Preferred always get their dividends first, and then we get our divided by our average common stockholders' equity. And so that net income, we'll just use one example. Examples here. Net income again, 3.6. And instead of an average, just to speed up the class, because I can get too excited about this stuff, total equity, I'm just going to take that total equity. 15,584. So Costco makes about a 24% return on equity invested. That's huge, right? So if you invest $1 in Costco, they make you a 24% return based on that dollar of equity you invested. Walmart, let's see how Walmart stands up. 14,881 divided by, let's look at their equity. They still have sizable, right? You get about an 18% return, or 18 cents on every dollar you invest into Walmart goes back into their equity. Meaning equity is either going to be paying you in dividends, right? So Walmart will pay you dividends, or equity is going to be paying you out in equity will pay you out in their retained earnings, where they're going to keep reinvesting their money. And right, by reinvesting their money, they're going to be reinvesting in assets that generate more returns for your equity. And so here we see that Costco generally makes more money for its investors than Walmart, likely because Walmart has so many investors.